Okay, here's a quick one for you today. We're going to talk about this account that I think is probably the most underrated retirement account that you can access. Hi, my name is Samuel. If you're new to the channel, thank you for coming. And if you're not new, thank you for coming back. So the 401k, been around for a while, really odd name. What's the deal? How can I use it to benefit myself financially? A 401k is simply a retirement account that the government created. It's literally in the tax code. That's where the name 401k comes from, to incentivize people to save for retirement. As the pension was falling by the wayside, we needed another vehicle to invest our money so that we could have a strong and secure retirement, and the 401k was born. Many companies offer a 401k, and they might have some additional benefits on top of that. So today we're going to talk about what a 401k is, why you might want to use it, and why it might be the only retirement vehicle that you need. Now, before we get too far into this, I want to remind you, I'm not a financial advisor, and none of this is necessarily financial advice. I'm just here to share with you what I do and hopefully educate you along the way. So a 401k is an account that in the year 2023, you can contribute up to $22,500, and that's money that you can invest for retirement. And it's an account that is literally built to incentivize you saving for retirement. And there are two kinds of 401k accounts that you might have access to. The first is a traditional 401k account, and the second is a Roth 401k account. Both of them are tax advantaged in some way, and I'll explain them quickly. Okay, so what's the difference between a traditional and a Roth 401k? Well, a traditional 401k is money that you're contributing pre-tax, while a Roth 401k is money you are contributing after tax. The benefit of the traditional 401k is when you put money into that account, that's money that you are not taxed on. So if I put $2,000 in my traditional 401k, I'm not going to be taxed on that $2,000. A Roth IRA is money that I'm putting in after it has been taxed. So if I put in $2,000 to a Roth 401k, that means I've already paid taxes on that $2,000. The difference is when I get to retirement age and I pull money out of my traditional 401k, I'll be taxed on it. When I pull money out of a Roth 401k, I will not be taxed on it. So the traditional saves you a little bit of money on the front end and allows that money to grow tax deferred, but then will be taxed when you pull it out, whereas a Roth allows you to contribute money after you've paid taxes on it and allows that to grow tax-free so that when you pull money out, you don't have to pay taxes on it. Now, it depends on your specific situation, tax bracket, all of those things as to which is best for you, but I think we can all agree using one of them is much better than not using either. Okay, so let's talk about the contribution limit, because there is a limit. And in the year 2023, you can contribute up to $22,500, unless you're over the age of 50, in which you can increase that by an additional $7,500 a year. And I think for most people, $22,500 is a great number. You might even be able to contribute all that you need to retirement within that. And $22,500 probably seems like a lot of money to most people. And if you are just looking into a 401k for the first time in your life, that is probably an overwhelming number. But don't worry, you don't have to contribute up to that amount. You can start wherever you are. But the beauty of that number is if you have an income of, say, $112,000, that allows you to save 20% of your income for retirement every single year. And that's a great savings rate. Another advantage to the 401k is the fact that you aren't the person responsible for it. And to the average individual, not having to set up transfers into an IRA or invest the money yourself is actually a wonderful benefit. All you have to do is determine how much you'd like to save and let HR know. They take care of the rest. For most people, that's wonderful because it is simple and it makes it more difficult for you to slow or stop those contributions, which is an added benefit. Now, plans vary, investments vary, fees vary, so you want to make sure that you understand your specific 401k plan before you're investing into it, because it might not be the best option for you, even if it's available. With that said, a lot of companies offer a 401k match, which means if you put in $1, they will match that dollar up to a certain percent. Let's say you contribute 6% of your income to your 401k, your company may match that, giving you an immediate 100% rate of return. And it's hard to beat that with any investment. Furthermore, a lot of companies offer plans with low-cost index funds or target date retirement funds, which for someone starting out are wonderful options. An additional benefit is it's very hard to get that money until you're at retirement age. You can withdraw it, but it's going to be taxed and penalized, so you don't want to do that. It disincentivizes you from pulling money out before retirement. And in my opinion, the best way to invest money is to find good, solid, low-cost index funds and not touch them for 30 years. Now, there are disadvantages to the 401k, and there are advantages to other retirement accounts, so you want to do your own research. But I think for most people, the 401k is a great option, especially if you have a company match, and it may be the only retirement account you really need. If you would like to invest beyond the $22,500, there are some plans that allow you to go even beyond that limit after tax. So be sure to speak with someone from your company about your own 401k plan, do some research, and maybe start investing. Start with whatever you can, because the best time to start investing was decades ago, but the second best time is right now. Now, this is a very quick, rudimentary level understanding of a 401k, and I hope to make more videos soon. So if you like content like this, go ahead and click that like button and please subscribe. Thank you for watching. I hope to see you again soon. We'll see you next Tuesday.